Welcome to today's Explainer. We're diving right into the wild intersection of aerospace engineering and Wall Street valuations. It's this crazy space where literal rocket science meets intense financial speculation. Today, we are looking at Intuitive Machines, a company trying to completely conquer the lunar surface while simultaneously navigating the incredibly volatile gravity of the stock market.
Okay, let's dive into this apparent paradox, because it's absolutely fascinating. Seriously, how on Earth, or I guess how on the moon, does a physical setback like a spacecraft literally falling over actually translate into massive financial momentum back home? Well, to understand the current financial reality of Intuitive Machines, we first have to understand the physical reality of what happened 238,000 miles away.
All right, Section 1, the historic IM-2 mission.
So, the IM-2 mission was this wild mix of unprecedented success and intense engineering hurdles. Their Athena lander actually pulled off the southernmost lunar landing ever recorded, touching down in the highly rugged Mons Mountain region. But, you probably know the story, it actually landed on its side, inside a crater. But, here is the crazy part. Despite literally lying horizontal, Intuitive Machines still managed to run NASA's critical payloads right there at the lunar South Pole before the batteries finally depleted.
Now, the mission eventually had to wrap up because of the brutal environment. The combination of extreme cold and the really harsh sun angles down in that crater meant Athena just couldn't recharge its solar panels. But why does this actually matter? Well, the main takeaway for us is that this mission proved something huge. This incredibly rugged, highly sought-after region of the moon, an area totally avoided in the past, is now officially open for business.
Moving right along to Section 2, Navigating Stock Price Volatility.
This contrast right here, it perfectly captures the hype versus reality tug-of-war in the new space economy. On the bullish side, analysts are seeing massive long-term upside. We're talking a consensus buy rating, an $18.40 target price, and a beta of 0.352, which actually suggests it might be less volatile than the broader market under certain conditions. But the bearish reality is pretty stark. Their current earnings per share is sitting in the negative at -$2.22, the book value is negative, and some 30-day short-term forecasts even had it dropping all the way down to the $2.30 range.
Which brings us to this incredibly wild number. Their forward price-to-earnings ratio is sitting at a staggering negative 178.75. I mean, a number like that absolutely screams that this is a purely speculative growth play. Investors are definitely not buying Intuitive Machines for the cash they're generating today. No, they're betting heavily on future promises, massive upcoming contracts, and the overall maturity of the space sector itself.
So, let's take a look at those future contracts in Section 3, the billion-dollar backlog.
Because this is the number that completely flips the conversation. By the end of March 2026, the company successfully secured a record-breaking $1.1 billion contracted backlog. And remember, this isn't just a corporate vision board, we are talking about actual, legally binding contracted agreements. This massive jump, over $842 million in recent growth, proves they're way past just being a one-landing company. Just look at January 2026. Acquiring Lanteris added over $612 million to that backlog alone. Throw in the IM-5 mission and a handful of defense awards, and you're looking at a company that is aggressively stacking its revenue streams for the years to come.
And this isn't just theoretical money sitting quietly on a ledger somewhere. They actually expect to convert up to 65% of this massive $1.1 billion backlog into real, tangible revenue by the end of 2026. The rest of it, that's going to flow in during 2027 and beyond.
Thanks to that incredibly rapid conversion pipeline, management has confidently set their 2026 full-year revenue guidance right around that monumental $1 billion mark. And honestly, this is exactly the kind of financial anchor a company desperately needs to validate that massive negative PE ratio we were just looking at.
Shifting gears a bit, let's look at Section 4, Beyond Lunar Landings.
The real secret sauce here is diversification. Intuitive Machines is pivoting, and they're doing it fast. They're no longer just this niche moonlander company trying to scrape by from mission to mission. By expanding into national security, defense, communications infrastructure, and even deep space operations, they're transforming into a full-on space infrastructure provider. They are literally stepping into the ring to compete for the exact same massive government budgets as legacy defense giants like Lockheed Martin and Northrop Grumman.
But as you'd probably expect, this kind of aggressive expansion comes at a hefty premium for investors. If you look at the valuation, Intuitive Machines is trading at a forward price-to-sales ratio of 7.54. Compare that to the aerospace industry average, which is just 2.42. You're basically paying more than 3 times the industry average for a slice of their revenue. The market is already pricing in a huge expectation of future dominance.
Which leads us straight into Section 5, Long-Term 2030 Space Forecast.
Analysts are really painting a picture of short-term volatility giving way to explosive long-term growth. While they do predict a dip down to roughly the $5 mark in 2026, just look at what happens as we approach the end of the decade. As those massive backlogs turn into actual cash, projections show a steady recovery into 2028 and a significant surge stretching all the way past $31 by 2030. It's going to be a bumpy ride, for sure, but the destination is incredibly high.
And that brings us to the ultimate question we have to grapple with. As Intuitive Machines expands its reach from the cratered surface of the lunar South Pole all the way to global defense networks right here on Earth, is that high premium you're paying a huge warning sign of overhype, or is it literally just the required cost of admission if you want a seat at the table in the brand new space economy? It's an absolutely fascinating question that every space investor has to ask themselves right now as we look to the stars. Thank you so much for joining me for today's Explainer.